Don't go one more day of your life without understanding this simple concept in your taxes. You have the choice of how you deduct in your taxes. You can either choose a standard deduction or itemized deductions. A standard deduction is offered to all of us. It's $15,000 as of 2025 for our federal taxes. What does that mean? It means if you make $100,000 taxable income, you can have that $100,000 immediately reduced to $85,000 taxable income for you to then pay taxes on. What does that mean if you're a W-2 employee? You may have had taxes coming out monthly based off your $100,000 income. Therefore, you may get a tax return at the end of the year from the IRS because you only owe taxes on $85,000 after your standard deduction. That's awesome. Thank you, U.S. government. Now, you may not choose to use a standard deduction. You may instead choose to itemize your deductions, utilizing amortization, depreciation, interest paid toward your mortgage maybe, right? Other write-offs like charitable donations, things like that. If those amounts exceed $15,000, it would behoove you to itemize your deductions instead. If you own a house, you have a much higher likelihood of itemizing your deductions because your interest paid each month toward your mortgage is all deductible from your taxable income for the year. Just throwing that out there. Now, if you have $16,000 itemized deductions, you may still choose the standard deduction because it's so simple. You just click the button, you get $15,000 off. You don't have to itemize shit. Now you get the benefits. It's basically the same. Now, let's say you had $10,000 of itemized deductions and you live in California. You may choose to use a standard deduction on your federal taxes because it's a $15,000 standard deduction, which is greater than your itemized deductions, and then itemize your state returns because California only offers a $5,500 deduction against your taxes on their state side. So your $10,000 itemized deductions may be more beneficial for you on your state than your federal taxes. Depends on your state. No states offer a standard deduction greater than the federal standard deduction. Just throwing that part out there. This is what's important for you to know. You can choose one or the other, not both. You cannot choose to do both types of tax deductions on your taxes. Now, you may say, I have a CPA, I don't really need to know this. Here's why it's important for you to understand. If you don't have itemized deductions exceeding $15,000, then if you're gonna go try to do a charitable donation for the sole purpose of getting a tax write-off, it's not gonna matter at all for you. Because if you go donate $2,000 of goods, one, good on you, right? Go do that, that's amazing. But if that's the only deduction you have for the year, it's not gonna exceed your standard deduction amount, so you're not gonna end up utilizing it all because you can't use both. Don't forget, teaching is what I do.